Understanding the option chain is the first important step to successful crypto options trading. I'm full-time institutional crypto trader. And in this video, we are going to go through most important steps that you need to know in order to completely understand and navigate crypto options chain. So let's go! And we will take a look at the option chain on Binance exchange, on OKX exchange, on ByBit exchange, and also one of the most liquid exchanges for cryptocurrency options, Deribit by Coinbase exchange, which has the highest trading volume in the cryptocurrency options right now. And if you don't have account on Deribit by Coinbase exchange, you can use the link in the description below, and you can be sure that you are visiting the right page, and also you can get small bonus from me. So, first of all, let's take a look at the Deribit by Coinbase exchange, and after that we will take a look at Binance, ByBit and also OKX exchange. But the structure of the option chain is very similar, and that you will see very soon. So let's start first of all with Deribit. So first thing first, to open the option chain, you have to select the cryptocurrency that you would like to trade. On Deribit, you have Bitcoin and Ethereum options, which are inverse options. In this case, premiums are paid and received in the cryptocurrency. And you have also USDC options for AVAX, Bitcoin, Ethereum, Solana, Tron and XRP. And let's select the expiration date to open the option chain. And here we go. So first of all, on top, we can see all different expiration dates that are available for this cryptocurrency. In this case, we can see very short-term options. For example, the current expiration date has a bit more than 3 days until the expiry. Then we have the midterm expirations, such 1 month or quarterly, and at the end we have long-term options. The longest one right now is almost 1 year until the expiration date. After you choose the expiration date that you would like to trade, we can take a look at the option chain. In the middle of the option chain, we can find all the strike prices, from the lowest strike price to the highest strike price. And if you would like to adjust the visibility of the strike prices, you can click, for example, at the Around ATM button and select how many strike prices you would like to see. For example, right now I have 10 strike prices, and that means that I am able to see 10 strike prices below the current market price and 10 strike prices above the current market price. Also, I can select the strike price range. For that, I have to click on this button and select the lower bound, so let's say $70,000, and the upper bound. So let's take, for example, $80,000. So $80,000, here we go. And in this case, only select the strike range between 70,000 and 80,000 will be visible on my option chain. And as you can see, there are a lot of different expiration dates and also strike prices. And it's easy to be confused at the first glance. And very often I receive the following questions. Which expiration date is better to choose? Short-term, mid-term or maybe a long-term? And after expiration date is selected, which strike price is better to choose? Which is close to the current market price or far away of it? Also, how to analyze the volatility and how to understand that right now is the time to sell the options. And of course, how to earn passive income with cryptocurrency options. And based on multiple one-on-one sessions with my clients, I created a guide to crypto options. I spent a lot of time to combine all important information in one guide. And from this guide, you will know how to analyze the market before the trade and also how to use strategies to earn passive income with crypto options. So if you would like to learn how to trade crypto options in professional way, you can find the link in the description below. And now let's come back to the option chain. After we selected all the strike prices that we would like to see, we can take a look at the call options and the put options. All the call options you can find on the left side of the option chain. On the right side of the option chain, you can find all the put options. So right now the option chain has a lot of information, so let me adjust it a bit so it would be easier to understand. So let's disable, and here we go. So now it looks much better. So basically, if I would like to speculate on the price increase, I need to buy a call option. And if I would like to speculate on the price decrease, I have to buy a put option. And to buy the option, we have to find the price for this option. For example, let's take the strike price of $74,500. Here you can see the bid price, the market price and the ask price. If I would like to buy the call option, I have to take a look at the ask price. This is the best price I can get to buy the option. If I would like to sell the option, I have to take a look at the bid price. This is the best price that I can get for selling the option. And in between them, we can see the mark price. This is a theoretical or fair value of the option. So this is a great indication for you to know what is the fair value of this option right now. And almost all the time, the mark price is the price between the ask and bid price. Also, there is a great way to keep in mind which price you have to look at. For example, if I would like to buy the call option, I have to take a look at the red price, because in this case I have to pay, and the price will be deducted from my account. If I would like to sell the option, I have to take a look at the green price, because in this case I'm selling the option and I'm receiving this premium. So that means this premium will be added to my account. Also, with inverse options on Deribit, it's important to mention that all the prices are in the cryptocurrency. So for example, right now I have Bitcoin options and all the prices are in Bitcoin. So that means if I would like to buy a call option with a strike price of $74,500, I have to pay for one call option, which is equal to 1 Bitcoin, I have to pay 0.0215 Bitcoin. And if I would like to know the indicative dollar value of this price in Bitcoin, I can select the dollar value and then I can see the dollar price. But this is only the indication for me. The trading is take part in the cryptocurrency. And if I would like to sell this call option, I will get the equivalent of $1,570. Also in the middle, we can find the percentage value. For example, right now it is a 52%. So this is the implied volatility level. This is a future forecast of volatility based on the option prices. So that means that the market implies the annual volatility of 52%. And on the left side for the calls and right side for the puts, we can find the delta. Delta shows me how the option price will change if the Bitcoin price moves by $1. For example, if the Bitcoin price will move $1 higher, the call option will move by $0.53. And you can find the delta for each strike price. And also delta shows the probability that this option will end up in the money. For example, the strike price of $77,000 has a delta of 0.28. So that means there is a 28% of implied probability that this option will end up with 28% in the money at the expiration date. And also, if we click on the columns, we can select all other Greeks. For example, Theta, Vega, Gamma. And also all about these Greeks, I have a video where I explain exactly what each Greek means and how to use it with real examples. And before you trade the options, I strongly recommend to watch this video and understand all the Greeks. That's not difficult, but it's very important to know. Also, we can check the volume and open interest. For example, if we take a look at the put options and the strike price of $71,500, we can see that the open interest is equal to 116 Bitcoin. And the trading volume today was exactly the same, which is equal to 116 Bitcoin. And the reason for that, this expiration started to trade today. But if we go, for example, to the end of March expiration date, here we can see, for example, the strike price of $70,000 has an open interest of 4,000 bitcoins. And today the trading volume was 400 bitcoins. And by using this information, we can find the most liquid strike prices. For example, if I select all the strike prices that are available, we can see that some of the strike prices has the high open interest and some of the strike prices have a low open interest and also the trading volume within a day. And some strike prices has a high open interest and very high trading volume within 1 day. And if I would like to trade a specific strike price, I have to click 2 times on it, and then I can find the trading window. Here I need to select the contract size. In this case, one put option is equal to 1 Bitcoin, and the minimal size is equal to 0.1 or 0.1 BTC. Then I need to select the price. For example, if I would like to sell the option, I have to take a look at the bid price. And if I would like to buy the option, I have to take a look at the ask price. And then I have to click on the buy or sell button. For example, I would like to sell the option and I click on the sell button, and here I have a confirmation window, which tells me that I'm going to sell the 70,000 put option with the expiration date at the 27th of March 2026. I'm going to sell 0.1 BTC at the price of 0.0115 Bitcoin. And because I'm going to sell the option, I'm going to receive this premium, and that's why this is the credit. And here I can find the total credit that I'm going to receive after I execute this trade. And if I would like to execute, I click on the create order and the trade will be done. And now let's take a look at the Binance option chain. So as you can see, it's very similar to a Deribit option chain. On top, we can find all the expiration dates that are available. In the middle of the option chain, we can find all the strike prices, from the lowest strike price to the highest strike price. And also the same as it was on Deribit, on the left side we can find all the call options, and on the right side we can find all the put options. On Binance, Bitcoin is trading against USDC, so all the prices are shown in USDC value. And this is also the same for ByBit. And ByBit option chain we will take a look very soon. But let's come back to a Binance option chain. So here you can see, if I would like to buy a $72,000 put option, I have to pay $1,395. So as you can remember, if I would like to buy, I have to pay. So this is the red price. And if I would like to sell the put option, I am going to receive the premium, so it's a green one. So that means if I'm going to sell this put option, I'm going to receive $1,380 per 1 BTC. So if I'm going to sell 0.1 Bitcoin, I'm going to receive $138. And in the middle, we can find also the fair value of this option. And also here we can find the implied volatility level for this strike price. So as you can see, each strike price has its own implied volatility level. For example, for this put option, you can see the implied volatility of 51%, and for the strike price of $70,000, you can see the implied volatility of 56%. Here we can find also a delta for this specific strike price. For example, a delta of 0.22 is for the strike price of $70,000. And also we have the open interest for each strike price. Also, if we would like to select the specific strike prices, we can select around the ATM button and select how many strike prices we would like to see. And also we can select the strike range. And in this case, we can select the strike range that we would like to see. Also, what I like personally almost all the time keep selected is the strike to index price distance. So let's select it. And here you can see the distance to a strike price from the current market price. So that means the strike price of $70,000 is 6.28% far away from the current market price. So basically, Bitcoin has dropped more than 6% to reach this strike price. Or for example, Bitcoin has increased more than 12% to reach a strike price of $84,000. And for example, if I would like to add different Greeks, then I can click on this icon. And in this way, I can customize the option chain. For example, I would like to add Theta, Vega, and also leverage. And here we go. And here we can find all the Greeks that I selected, Vega and Theta, and also the leverage. For example, the strike price of $80,000 has an amazing 190x leverage. So yes, options is a very high leverage instrument. Here you can see, for example, a strike price of $86,000 has a leverage of 740x. And by the way, if you buy the option, there is no liquidation risk, because my maximum risk is the premium that I pay. For example, in this case, if I would like to buy the strike price of $86,000, I have to pay 100 USDT, and the maximum risk that I have is equal to 100 USDT. And that's why this leverage is so high. And now let's take a look at the OKX options. And here you can see that OKX option chain is also very similar to a Binance and also Deribit exchange. I can also select all the strike prices that I would like to see with around ATM or the strike range. And also I can adjust the option chain by using the settings. For example, here I can select the Greeks that I would like to see, or I can select the distance to the strike. And now let's take a look at the ByBit option chain. So first of all, to open the options on ByBit, you have to go to the trade and then options and select the cryptocurrency you would like to trade options for. For example, I selected the Bitcoin, and on ByBit, the options are trading against USDT. So that means all the prices are visible in USDT. Also on the top, I have all the expiration dates, and on the left side I have all call options, and on the right side I have all put options. So exactly the same as it was on previous exchanges. Also I can make the option chain smaller. And if I would like to add different columns, I have to click on this button. And here I can select everything that I would like to add on my option chain. For example, I can add leverage and let's say 24 hours volume. And here we can see the same structure of the option chain. In the middle we have all the strike prices, we have calls and puts, we have the ask prices which are red as well. So that means if I would like to buy the call option with a strike price of $76,000, I have to pay 115 USDT. And if I would like to sell this call option, I am going to receive 105 USDT. Here we can see also the fair value of this option, which is equal right now to $108. So that means basically if I'm going to sell right now this call option, I can sell it at a higher price that its fair value of $108. So nice one. And here we can find also the implied volatility level for this specific strike price. And if I would like to trade, I have to click on the strike price, and basically I have to select what I would like to do. Would I like to buy or would I like to sell this option? Select the price for the option. For example, if I'm going to sell, I can select the best bid price, so the green price in this case, because I'm going to receive the premium, and then select the quantity that I would like to trade. On ByBit, the minimum trading size is equal to 0.01 BTC. And then I have to click on execute this trade. And by the way, if you would like to be up to date, you can join my free Discord channel. There you will find the market updates, expected price move for BTC. So basically this is expected move of Bitcoin within 1 day with a probability of 95%. And with probability of 95%, the Bitcoin will stay within this price range. And also you can chat with me and ask different questions. So join my free Discord channel. And if you would like to learn more how to trade options and make passive income with the options, you can watch my next video here or here. See you in the next video. Bye.